A client of mine told me he couldn't grow his business anymore. Most stories actually start this way, right? For business owners, it's the same as you walk into a bar. So my client told me he couldn't grow his business because month after month, his profit margin was decreasing, while his sales were slightly increasing. So we went through his numbers, his profit and loss statement, and I ended up asking for information he didn't even have. He managed to gather everything after a couple of days, weeks, and I figured that something really simple happened. His operating expenses went through the roof, alongside his overhead expenses. And then we had to find out why, because you have to go deeper, always. And we figured that it was closely tied to the fact that the absenteeism rate was extremely high at 14%. Yeah, extremely high. Therefore, he often had to hire interim workforce. He's in the roofing business with about 2.5 million in revenue. But the process of finding the root problem can be applied to any business. Okay? So we found a very high absenteeism rate. Now we have to go deeper, because this is not the cause of the problem. This is the consequence, the symptom. But if you don't have the right metrics, you're not even aware of the symptoms of a disease. Okay? You're not even aware that there is a disease. Therefore, you don't even know that your business is sick. Okay? So why such a high absenteeism? We found out that the root cause was in the culture of a company and the way his employees were managed. There was a lack of culture and recognition, which is a whole other story. It was not a question of marketing or sales. What I want to emphasize is that without the right metrics, you don't even know what's going on in your business. My client was only looking to his sales and marketing metrics as if he was still a low six-figure business owner. This is not enough, especially when your business is making 2.5 million, and especially when you have dozens of employees. So this reminded me of another story that's too long to tell here, where the business owner didn't know his business receivables turnover ratio. No, its amount, i.e. the money that other businesses owed him. So I figured that there were two common metrics that everybody talks about: sales metrics and marketing metrics. Sales metrics, where you find revenue, profit, number of clients, active clients, and so on, and marketing metrics, where we talk about lifetime value, cost per acquisition, conversion rates, and so on. But there are other metrics that are totally overlooked, while they should be closely monitored, especially within 7- and 8-figure businesses, sometimes even in 6-figure businesses. That's what I want to focus on in this video. That's something that you have to know to grow your 8-figure company, okay? And by the way, I'm always mentioning 8-figure businesses. That's because it's my goal for you. I don't want you to own and sell your 5-figure or 6-figure thing, make a quick buck, and go on another shitty business. I want to change the way you see businesses. 8-figure is where freedom is. 7-figure is just a milestone. Believe me, it's a great milestone, but just a milestone. The freedom at 7-figure is limited. Your life definitely changes from 10 million and up. And the thing is, if you make it to 7-figure, you can easily make it to 8 with the right recipe, i.e. if you work on the right things. What brought you here won't get you there. And if you make it to 6-figure, I see no reason you can't make it to 7. When you reach 6 figures, you have just proven your business model works. That's it. There's a market for what you offer, nothing else. Then the serious stuff begins. As long as you let go some of the activities that allowed you to grow your business so far, and you start working on other activities, more important things. Okay? Things that were important to work on to grow a 6-figure business are not that important to grow a 7-figure business. You have to switch. It's not the same schedule. Okay? Same thing to go from 7-figure to 8-figure. Everything is in my book, The 400-Hour Workweek. Work on the right things at the right time to grow your business fast, your 8-figure business. Don't guess anymore what to work on to bring your business to the next level. Okay, you can get it by following the link below and on Amazon. This is inspired by a decade of close work with hundreds of multimillionaire entrepreneurs. So, your metrics. You must know all of them. You must know them and you must know where you want to go from there. Okay? There are operation metrics, customer metrics, HR metrics. Probably the most important ones, you reach the 8-figure level, HR metrics, are second most important, because there's one metric that is overlooked more often than not by business owners, while it should be the most important one, at least from one point in time, between the 6 and the 7-figure level. And from there, probably forever. This is the financial metrics, our financial KPIs. Don't worry, I'm not an accountant. I won't bother you with lame ratios. I'll just give you the numbers to look at on a weekly or monthly basis as a small business owner, because there are things to monitor. But first, remember this. The game of business is simple. The economic value of your business is created by the way you use your assets to make a profit, to generate more money than you spend. And the way you manage your business cash, otherwise you can go bankrupt, even if you are profitable. That's it. These two things. The way you manage your profit, the way you manage your cash. All right? All the other numbers and ratios tie in with that. Like a pilot in an airplane, there are indicators that you must keep an eye on, even when you are on autopilot. The game of business consists of converting assets into cash. All right? You have assets. Assets produce revenue. Revenue generates profit. Profit converts into cash. Remember this. So let me give you a couple of indicators to keep an eye on. This is not an exhaustive list, and I'm not giving you generic accounting rules and principles. What I'm providing here is an opinion about what has worked for the successful companies I have run and worked with. Okay? First, cost of goods sold. If you sell products, material plus labor necessary to build the good. Cost of goods sold in absolute terms and in percentage of revenue. Keep in mind that it includes the packages that are an integral part of the product. Like, think about the iPhone package, how smooth it is. It's part of the product. It's included in your experience. Therefore, it's included in the cost of goods sold. But it excludes your distribution or delivery cost. Okay? When you subtract your COGS, cost of goods sold, from your revenue, you get your gross profit. Okay? If you don't sell products, you don't need this one. Second, your operating costs. That's COGS plus operating expenses plus overhead expenses. You need this in absolute terms and in percentage of revenue. That's where you put your distribution, labor, shipping costs, and so on. Okay? Then receivables turnover ratio, net credit sales divided by the number of accounts receivable. You need to know how much of your money is not yet in your business bank account and you need to watch closely any increase and to find out why. Okay? Closely monitor this one. Then, your marketing costs in absolute terms and in percentage of revenue. It may have ups and downs depending on your activity, your project, your strategy, the season, whatever. As long as it's expected and under control, it's all right. Personally, I always devote between 15 and 20% of my revenue in my marketing across all the companies I had. Then your debt ratio. That's total debt divided by total assets. For example, if your business has a total assets of 1 million and a debt of 250,000, your debt ratio is 25%. Okay? Is it good or is it bad? It depends on your industry, but 25% in general is nothing special. It's normal. Okay? And the last one, your payroll in absolute terms and in percentage of revenue. Because you want to hire superstars, but you want to keep your payroll under control. Okay? There are some other important financial metrics such as your cash ratio, your return on equity. Everything is in my book, in the chapter Watch Your Business Finance, which is a very important activity. We all, meaning a 10K an hour activity. Okay? We all have different metrics to keep in mind. You just have to find out the few vital ones for your business, for your activity. Okay? When you keep an eye on them, you know what's going on in your business because your financial metrics are the outcome, the results of your actions. By looking at them, you know if what you are doing is right. For example, a huge increase of your operating costs, you ask yourself, why is that? What's the reason? Did you expect it? What happened? All right? You have to dig deeper each time to find the real reason. Let's say your sales can go over a certain point every month. This is the symptom. The problem, the root cause lies somewhere else. Not enough prospects, not closing enough, lack of referrals, no recurring revenue. It can be many things. It's up to you to find out. All right? Financial metrics are for me the most important metrics. The ones that are on top of the business. They are here to tell you if everything's fine or if there is a problem. And then you look at your sub-metrics. Sales, marketing, customer, operations, HR, and so on. It's up to you to dig deeper and find the most important metrics for your business, the ones to monitor on a weekly or monthly basis that will help you make the right decisions regarding your strategy. There are KPIs that I closely watch in one of my businesses that I don't monitor at all in another one. For example, watching your current ratio is not something very useful for small businesses under 5 or 10 million in revenue. Okay? For each of these indicators, even if the number you get doesn't mean a thing to you for now, monitor it over time. And it all starts to make sense because you will have a benchmark to compare it to, all right? Again, the metrics are the symptoms. When you find something wrong, a bad symptom, then you have to find the root cause of the problem in your sub-metrics, okay? But it generally all starts with your financial metrics. That's the language of business.